Hello everyone and welcome into the channel. My name is Brent, and in today's video the market has hit an all-time high again. Should we be investing in the market or should we be waiting for a dip? I'll show you exactly what I'm doing and what not to repeat from past mistakes. So in this video we're going to go ahead and cover investing at all-time highs here in 2025. We can see that here as of today, July 2nd, 2025, the market has officially closed at a new all-time high of $620.28. So should you still invest here at the top as it's making new records? In this video, I'm going to go ahead and show you guys exactly what I'm doing and how to avoid FOMO, the fear of missing out, because it is pretty wild out there. Some of the chitter chatter that I have seen talked about out in the market. So if this is your first time here, I would really appreciate if you go down below, like, comment, subscribe, and let's go ahead and get into it. So here's a quick update of what we're going to be covering here in today's video. S&P 500 has been tracked using SPY since back in 1988 up until here 2025. There were some instances between 2000 and 2007 where the market did fall and take a few years to recover. It did happen two times, right? 2000 up in 2007 and 2008 up until 2013. The market fell, took a while to fall and then took a while further to even recover. So we haven't had a lot of those instances here lately since, 2009. That is because the Fed and the regulations behind just printing money, pumping money, easy money sort of stuff, right? Dropping rates, pumping money into the economy, handing out stimulus bills, stimulus cash. It's got, over the last few years, it's got kind of like the point where the market can't crash. So we don't know what will happen in the future, but it's happened in the last four instances here: 2018, 2020, 2022, here in 2025. The market essentially fell very sharply and quickly recovered soon after. So it's really hard to predict when we'll be at these all-time highs, not only the fall, correction, crash, but the recovery as well. So let's go ahead and take a look at some of the history here. Back in 2018, 2019, that was the very first time that I sat through one of the bigger corrections where my portfolio had a pretty decent size and hit. 2013, came back to the States, had been saving up money, deposited money towards a house, and then had been saving up a pretty good nest egg at that time frame. 2018 rolled around. That was the first time where I witnessed the market really falling a good hard hit. Down 12% in 2018, and a lot of panic out there. I remember being on YouTube here creating content where on a weekly basis the S&P 500 would be down, up or down on a base, 5% basis here. You can see these huge swings up and then down and then up, right? Happened quite a bit, and there was a lot of chatter at 2018 that this was it, the market was going to be crashing, this is going to be the end of it. But we closed down for the 2018 at a low. I think it was down around 10 or so percent when it when it closed officially. And then that following year in 2019, it was nothing but up, up, up and away. 2018, the market had recovered not only everything that had fallen and lost in the past year, but it had actually gone up 20% over the course of those 2 years in the market. And trying to time these market highs and trying to time the way down and trying to buy back it can be a very quick happening, which we'll showcase here in the next preview here. So 2020, 2021, this is the one that quickly, I think, caught a lot of investors out of really quickly, right? A lot of people they got locked inside. We all worked from home for the most part. We all wore masks. A lot of the small businesses got hit really hard. I know a lot of them here locally that closed up shop during this time because they couldn't do what the government had mandated it for them to do with those kind of restrictions, right? So a lot of the bigger businesses were able to stay up, maintain during that time frame. But we can see here that the market did fall roughly 28-30% in 2020. That same year that the market was down 20 to 30%, this is all 1 year. This is January 1, 2020 up until December 31st, 2020. So this is 1 year, 365 days. The market not only fell 30% to the negative, but it fully recovered and closed up 16% in a single year. So that was just 2020 alone. But in 2021, I don't have a graph for it, but we'll cover it in just a moment. It was up 26% the following year. Now, after the positiveness of 2020 going up 16% and 2021 being up 26%, the market essentially took a break. 2022, 2024, nothing happened. I mean, something happened. The market fell and crashed in 2022, falling out at a bottom and closing around negative 20% in 2022. But if you just stayed invested and just continued to dollar cost average, the whole market recovered and essentially over a 2-year period had closed at a 0.07 positive, but essentially did nothing for 2 years, right? Here we opened at 475 in 2022. We closed around 475 in 2024. So there was that little time period there where nothing happened. The market just kind of moved along sideways. It was a great time, the dollar cost average. Now here, 2024, 2025, the market had put on a lot, right? I think the market when we February all-time highs was up 26% from January 2024 up until February 2025, when the market in year to date in 2025 was up around 4 or 5%. And then what happened? The market fell. The market did fall to a bottoming out period of around 20%. It was like 18 to 20% for the S&P 500. The NASDAQ did fall below 20%, but guess what's taken place? The market has fully recovered, and not only that, over the past week or so, it has pushed to new all-time highs, closing at a new record high of what, $620.28. So that was just an insane to witness there. I stayed pretty pumped into the market during this time. I did do a few transactions, selling out of my slow stuff, investing into the higher, more riskier stuff for the recovery play, and it worked out really well. So here we are over the past 2 years, January 2024 up until here today of July 2025, the market is up a whopping 30.5%, with us closing here today at a record high. Now, quick recap, right? 2018, that was the first time we had that kind of correction. That was a 12% correction. A lot of investors were kind of selling out of the market thinking this is it. This is the crash. 2020, the crash took place, but it was so quick and so fast to not only crash, but recover. A lot of investors got whiplash, right? 2021, that's what the market, or the year. I didn't really include the graphs here, but the market recovered, or not only recovered, but it went up 27%. So crash and recovery year, 2020, the market crashed 30% and recovered and then put on a 16% gain. That following year, 2021, the market put on a 27% gain. 2022, 2024, those are the lost years. Nothing happened. The market moved up 0.05%. Here we are, 2025. I would call this kind of like a crash, right? The S&P 500 fell down 18-20%, but it's recovered. This one's kind of like a weird play because 2025, if you looked at what took place, it was very predictable from the media, right? In February, we knew what was going to happen. Trade war. It was a big thing. Everybody knew what was going to happen. It just came out a little bit more uncertain than what was expected, right? Tariffs people were expecting a 10% tariff. I think it came out around a 40%. Then there was negotiations, that 90-day extension. July 7th is where that date's going to be heading here soon. We might have some upcoming tension going on where the market may fall quite a bit if something doesn't happen, but we'll see, right? Looking back at the history, peaks are only obvious in hindsight, so we can only see these peaks when we're looking back at history. We can't see the peaks today because we look at the peaks today, but those peaks of today are not the peaks of next week or next month. They're just a blip overall over history. So by staying consistent, whether it's investing in 2018, 2020, 2022, 2025, you just have to stay invested and keep going. When you take a look at your own situations back over the course of history, how long have you guys been investing? Was it this year, 5 years, 10 years, 20 years? What did you learn from your last market cycle? When the market dipped, did you panic and sell, missed out a little bit of the recovery? Did you play it right and sell at all-time highs and then buy back in at lows? A lot of people in the comment section, or just who I talk to, those that do end up selling do not buy back in until the market has already recovered around 50% of the initial loss. So if the market fell and corrected 20%, they might buy back into the market when it's moving up about 10%. And then they got that recovery to go. But they sold near the bottoming out period. So they might lose quite a bit of money, and they lose that difference. You end up losing quite a bit of money when you end up selling and then missing out on some of those best days where the markets are covered. So let me know down in the comment section below, what did you learn from your last market cycle? Why we hesitate at highs. This is one of the reasons that I stopped investing in individual holdings, because it was very hard to target my individual holdings. In M1 Finance, I had around 22 to 30 individual holdings. And once I deposited my capital, it was really hard to buy into stocks that were doing really well. When the stock was doing really well, I really targeted red stocks because, hey, I'm buying these at a discount. And it's easy to say, yes, I'm buying it at a discount. I'm buying it's going to recover. But if it doesn't recover, or the stocks that have done really well continue to do well and outperform, and the stocks that weren't really performing continue to, underperform or even side trend, it could really hurt your portfolio growth in the end. So why we hesitate at highs, not only like the negative headlines, I went ahead and included some of these. So stock market crash 2025, what to do from here, warning, this is just the beginning. Why Warren Buffett isn't predicting a stock market crash. Okay, that one I didn't see the headline there of isn't predicting. So I was, predicting everything in a bubble. It is bursting, expected. There's a lot of negativeness in the market at any one time. Not only about the stock market trading at all-time highs, but consumer debt being at all-time highs. And while it is all negative and it is semi-true, you can't listen to the headlines, right? The fear of buying at the top is always going to be there on a day-by-day basis, week-by-week basis, month-by-month basis, especially if you're investing long-term. Today's high is going to be another week's low, or not low, but it's going to be way behind us. So don't wait for the dip. Stay consistent. Long-term investors benefit from consistency. So, question to you guys, are you investing right now, or are you building up your cash reserves? I'm doing a bit of both. I'll go ahead and chatter about that here in just a minute. So some of the ways you guys can avoid FOMO and staying focused is to set clear goals. We do this often. I'll go ahead and kind of cover some of the ways that I'm doing this, but set some clear goals, automate your deposits, avoid hot stock trends, get off Reddit, get off YouTube with those individual holdings, right? Focus on your income, focus on long-term value. So my thing is, do you automate or manually invest in the market? Let me know down in the comment section below. You guys hopefully have seen my videos where generally everything that I do is automated. M1 Finance, I used to automate all my deposits, automate my investing into auto invest. Not so much auto invest, I suppose. I would target my individual stocks right there. But lately, because I'm buying so much of the S&P 500 or VU, I just automate it. Here I have a screenshot that over the course of every week, I am having a recurring deposit into my SoFi investment account. What SoFi does is I deposit of X amount of capital that goes into the investment account, and then I have a recurring buy. If that money hasn't hit the investment account, the buy occurs anyways. It just takes it out of my savings account, but it doesn't matter. It's kind of an interesting way that it's set up, but it works really well. So I like doing scheduled deposits there. So my strategy here in 2025 is to consistently dollar cost average weekly, no matter what, no matter the market moving higher, moving lower. My money goes directly into the market, gets invested on Tuesdays. And then lately, my focus has been on ETF investing. It really takes away the guesswork. Individual stocks, I had to sit there, kind of watch what it's doing. Is it going to go higher? Is it falling and it's going to continue to fall? It's a falling knife. Will it recover? How much will it recover? What are its financials on a quarterly basis, yearly basis? I don't do that a whole lot. My only two individual holdings now in my entire portfolio are Google and Meta. Those are the only two holdings, and they make up less than $20,000 of my total portfolio, which is like a fraction of any like a tiny less than 1% of the portfolio. Dividend focused investing is very rewarding. So if you are brand new looking to get started, Getting started by focusing on dividend investing is a pretty nice way of focusing on those dividends, see that capital roll in because it is really rewarding. It's one of the ways that I kind of teach my son. He sees the capital get deposited into his bank account on, he sees the interest from a bank account when he had it over his bank account. And then now when he's getting dividends and it's getting reinvested and he's buying back more shares, and I'm letting him know, hey, these new shares that you're buying back, those new shares are going to be paying you future dividends. It's going to continue to not only grow but compound within itself. So it's a nice reward system there when you not really focus on dividend investing, but if you do have some companies that are dividend payers, it's kind of a nice, neat way of being rewarded. I'm continuing to hold some cash, but keep it moving mostly into reinvesting. The reason I hold some cash is because here we are at all-time highs. I do target a specific amount of capital to reach a specific amount of equity invested by the end of the year, but I want to have some cash to throw at the market if there is a bigger dip. Then I will throw more cash at it versus the market just kind of doing its normal thing, right? Sometimes the capital that I don't use for my normal monthly expenses, I'll reinvest that. But for the most part, it's just kind of keeping a certain amount of capital around just for the woes of the month or the expenses of the month. Focus on quality over hype. There's a lot of hype out there in these new AI stocks, but there's so many AI stocks out there to choose from today. A lot of it is just hype, and soon, focus on quality over hype, because while hype might get you something here in the short term, you really don't throw a lot of capital at hype. I see a lot of investors do screenshots of like, hey, I made 50% on this. I made 75%. I did 100%. But when you look at the portfolio, you look at their screenshot, they made, $30. They made $100. They made, a couple $100 or so. You can't focus on growth and long-term wealth creation by focusing on hype, because you can't invest heavy. You're not going to put $10,000, $100,000 into some hype coin or some hype meme stock, because that $100,000, $500,000, while it could make you rich, it could completely deteriorate and make you poor or even negative, right? So here is the M1 Finance portfolio. I did a little screenshot here of way back when we started the portfolio at $5,000, and it's grown. So 2019, 20, 21, 22, 23, 24, and 2025. Here's where we made a little bit of a change in the market here. We had those highs in February 2025. The market fell, but here we are in July 2025. Not only are we at where we were in February 2025, we've actually exceeded pretty nicely overall, not only in this portfolio, but all portfolios in general. So let me know down in the comment section below, what is your go-to stock or ETF for this month or this year? What's your go-to thing right now? Are you buying VU, SPY? Are you buying QQQ for the NASDAQ? Are you buying Meta, Facebook, YouTube? Not YouTube. I said Google. Google, right? Let me know what kind of company or ETF you guys are purchasing here in 2025. So, final thoughts: consistency builds wealth. Don't let the headlines distract you. You're gonna type in something in the Google. You're gonna get the thing that attracts the headlines, right? Don't focus on the headlines. Focus on your goals. Build a system. Do not guess. Stay invested. Stay consistent. Invest through the noise, not around the noise. Let me know down in the comment section below if you guys have a preference on topics that you want to hear discussed here on the channel. Let me know down in the comment section below. I would really appreciate it. If you guys would like to join my $1,000 investment challenge, this is the challenge to invest $1,000. And over the course of 40 weeks, we're going to be putting $25 into the SoFi investment account. And it's going to grow steadily and grow steadily. By week 40, we should hit our $1,000 investment goal. By week 52, we should have roughly $1,400 in the account, if not more, not only through capital appreciation, but through normal deposits as well. So, that is going to be it for me. If you guys would like to sign up, there will be a free investment tracker you guys can download in the link below. You guys can also sign up for SoFi Invest, SoFi Money. You can get up to $25 by signing up for SoFi Invest. Getting started with $25, you'll get a bonus of $25. If you sign up for SoFi Money, you can get up to $325 for signing up there as well. And that is it for me. I do appreciate everyone tuning in. Let me know down in the comment section below. All-time highs used to scare me, but now I just stay consistent. I'd rather invest through the noise than wait for the crash that may never come. Again, if you guys would like to download the tracker, there'll be a pinned comment down below. And let me know again, what are you guys invested in this month? Drop your top stock or ETF, and I will go ahead and reply to every single comment. So that is it from me. Thank you all for tuning in. Be sure to subscribe, hit notifications, and I'll catch you guys in the next video. Bye-bye.